How's it going, guys? It's your boy Yarimi. Welcome back to the channel. 7 habits that will make you a successful trader. Pay attention, take notes, because this, for me, is what allowed me to become a profitable, successful trader. So I'm not giving you guys advice from this guy or that guy or this book or that book. I'm simply giving you the advice that I have seen within myself. And this is the advice that I see in many traders. I've been able to speak and connect and ask questions to multiple traders around the world. I've been able to speak and connect with my own community of traders. So what I've done is I've compiled a short list of 7 habits that I believe every single person needs in order to become a successful trader. And use my code Yarimi for 120% refund off of all of your prop firm accounts with Funded Next, who have recently rebranded to FN. Let's get right into the video. The first habit you need to become a successful trader is ability. You have to know how to trade. But does ability only boil down to your ability to trade as a trader? No. Ability, being able. What does this truly mean? Ability in terms of trading means you have to be good at trading, and we're going to get into that. But there's so many different sub branches. For example, being coachable. Okay, being coachable. Being someone who truly wants to learn, having that obsessive fire inside you where you kind of say no to Netflix in the beginning of your trading journey, and the YouTube trading world suddenly becomes your Netflix. Okay, I know many of you are in this position right now. You guys binge watch so many different people, and it's good that you have this urge and you have this burning desire to want to become profitable so bad. You're eager to become profitable. It's good. But when you watch multiple different people, it can get quite poisonous long term, and you don't know you're being poisoned. Why? Because your mind is slowly being polluted with so many different trading ideologies. Okay? Technical analysis is subject to the trader and their strategy. So in the beginning, when you don't know much, you might be watching person X, person Y, person Z, thinking this is great, I'm getting so much information. But long term, you're actually deteriorating your growth, and you're not realizing that this is stunting your growth, not aiding your growth. So number 1 is having the ability to be coachable and having the ability to become someone who is eager. You have to be able to understand and, most importantly, absorb and retain information. The absorption and the retention of information will be very crucial in terms of your overall ability to trade, because in order to know how to trade, you have to learn a strategy. In order to learn a strategy, you have to have absorbed it, and you have to have memorized certain concepts. So it all boils down to the multiple branches of ability. What did we say? The ability to be coachable, the ability to have that burning desire, that burning eagerness inside you to learn more about trading. And lastly, the ability to apply, because application is what's going to be most important for you within these branches of ability. Why? Because if you're just learning and you're not applying, you're not trading. You're not trading. Trading truly begins the moment you start application. Application is when your chapter to becoming profitable begins. Why? Because then it's just trial and error, failure after failure, stop loss after stop loss, because you are doing what? You are undergoing the process of application. The process of application. Next, the second habit that will make a person a successful trader is risk management. Now, a lot of people throw out this word because it's just a word that when people hear it, they don't think you're a scammer, or they don't think, oh, this person is illegitimate. So fake people are now using this word to try and look real, but real recognizes real, so it will never ever work. But risk management, after learning how to trade, of course, is the most important habit. Why is it the most important habit? Because fundamentally, risk management keeps accounts alive. What do I mean by it keeps accounts alive? You see, many people who have blown accounts, they don't know the story of how they actually blew the account. Every single blown account has started with one bad trade. Now, you might be asking yourself, yeah, you're meant to take losses in trading. Of course. Certain things are a choice. They are not mistakes. Now, what could this choice possibly be? This choice is simply you being rebellious from the rules and commandments of risk management. Therefore, you have blown your account. So when I say all blown accounts started with a bad trade, it's because it is a cascade of losses. It is a domino effect of loss after loss after loss. And that comes from this mental insanity in trading, where you cannot fathom a loss and you cannot accept a loss. Losses are inevitable. You have to face losses. And this is within this point of risk management, because learning to accept risk means what? Learning to stomach losses. So when I say that accounts are blown because of one bad trade that leads to a domino effect, it's because what made that trade bad? What, if you actually look at your history, what made that trade bad? It is simply because that's possibly the one trade where you actually deterred from your trading plan and you did what? You over leveraged. You risked a little bit more. You didn't account for spread. You didn't account for commissions. You thought, okay, this is 1% risk. Okay, this is 1.5% risk. Let me calculate off the top of my head. Oh yeah, the pip range of this POI is this. So if I enter here and it hits stop loss, yeah, I should lose 1%, around 1%. If you ever say to yourself, I should lose around 1% or I should lose around 0.5%, you're not serious, because you're not accounting for your losses. You are not factoring in those commissions and those spreads that eventually add up. They do add up. So blown accounts start with this one bad trade that looks like this. It looks like this, where you risked more than your usual intended amount, where you didn't factor in for spread, where you didn't factor in for commissions. And now you're left with what? You're left with a series of bad trades. It was supposed to be one bad trade. What happened? You can't fathom the fact that you lost this amount, so now you're trying to get it back. And in the process of trying to get it back, you've lost your account. You violated your daily drawdown rules on your prop firm account, or you've blown your live account. Why? Simply because you did not adhere to the basic rules of risk management. Risk management is important, guys. Risk management is what keeps you in the game. Risk management is what will allow you to have your head above water when your account is drowning, when you're in a losing streak. Why? Because you're risking the correct amount every single time. Now, how do you know if you're risking an incorrect amount? One of the ways to know if you're risking the correct amount is when you hit stop loss, are you upset to a ridiculous level? Being upset and having those normal emotions, of course, we're human beings. But what I mean is, when you hit stop loss, do you feel almost sick to your stomach? You have that feeling. If you're a trader, you would know what I'm talking about. We've all been there. But that feeling right there is a telltale sign that you are not risking the correct amount. Why? Because you are attached to your loss. And you have this attachment to your loss because you know deep down it's not the correct amount you're supposed to risk. When you've actually been eliminated from the trade and you've hit stop loss, you're looking at your history thinking, damn, this hurts, because it's an amount that's so major to you that you can't fathom the fact that it's gone from your account. So risk management is what will keep your head above water, and it will allow you to stay afloat during times of losses, during losing streaks, during times where you're kind of having that imposter syndrome and you're doubting yourself. Risk management is what keeps you in the game. So implement risk management if you are not already. And if you are, take your risk management even more serious. Number 3 is patience to watch the markets without participation. Now, what do I mean? Do I mean just open the laptop and look at your charts all day long and be jobless? No, that's not what I mean. What I mean is, whenever you are trading within your certain time window, okay, within your kill zone, within your session, whenever you are trading at that time, understand that price may not always mitigate your POI. Understand that there may be POIs, there may be zones that look appealing, but they look like traps. And when you see zones that look appealing, but they look like traps, sometimes a person can start to make excuses. Have you ever been in a situation where deep down, you know the reason for your impatience is because you want to trade. So you start making up excuses, fake technical analysis saying, yeah, I can see this though, but I can see this. Oh, that's why I'm going to trade from this POI. But you know deep down, this is not within your criteria. You know deep down, this zone looks a bit too good to be true. So what do? You enter from that zone and you get stopped out. So sometimes you have to learn to watch without participation. Because when you watch without participation, you are simply waiting for better prices. You are simply what? Waiting for better prices. Of course, using terms like, okay, I'm waiting for my POI to get respected. Using those kind of terms is good, but you need to understand the core of this. The core of this is that it is a battle between bulls and bears, a battle between buyers and sellers. So if there is a battle and there is this tug of war between buyers and sellers, what does that mean? It means there is a dispute of who is possibly going to be in control. Whenever you see this dispute taking place, i.e. what? Accumulation, distribution, you see highs and lows being swept in the markets. Whenever there is uncertainty, you wait. You must wait. Wait for the traffic to die down. Wait to receive a better price. Whenever Sony come out with a new PlayStation, what happens on the first day of launch? The price point is very, very high. You come back 3 months later, you can save a few $100. So waiting for the right price is very, very crucial and important. Why? Because you want to get in at levels where price will immediately, if not immediately, soon enough react in your favor. And it can only do that once it has swept a relevant pool of liquidity. And if it swept a relevant pool of liquidity, what does that mean? That means there were people participating in the nonsense buy and sell exchanges, and they were taking out the trade. So to avoid being from amongst these people, what must you do? You must sit back, not participate, and watch. Just watch. Watch the dispute. Watch the tug of war between buyers and sellers until your desired price at the POI that you believe price will move off from after it swept the relevant pool of liquidity. Wait for that. That's what true patience is in the markets. When you wait and you are not moved by noise. You're not moved by, oh, there was a small impulse candle. Oh, there was a small candle that went in my favor. Oh, is price going to come back and tap into my zone? If you believe your zone is the correct POI where price is going to now create possibly a new higher high, or price is going to have a lot of momentum from the zone, what will be the reasoning for it to have momentum from that zone? A sweep of relevant liquidity, a pool of liquidity. There must be a significant pool lying there for it to have that much momentum to move to higher levels. Okay? So if you truly understand this, this should actually make you happy when you're not participating, because you know, okay, this is extra added confluence for my setup that I'm waiting for. Habit number 4 is practicing emotional detachment. This is a huge one, guys, because majority of the time, traders have very, very sad stories. Rightly so. Someone had a hard life. Someone's in debt. Someone has all these bills to pay. Someone wants to look after their parents. So they come into trading seeing that there is great potential to make a lot of money. So what happens is they try to fast track the process. And in the midst of them fast tracking the process, well, they believe they're fast tracking the process. In the midst of all of this, they have a huge, huge, huge anchor holding them down without them even realizing that they're being held down. And what is this anchor? This anchor is emotional attachment. They are emotionally attached to these markets. They are emotionally attached to the outcome of a trade. They are emotionally attached whenever a trade hits stop loss. They are emotionally attached whenever a trade hits take profit. Emotional attachment. So what is the solution? The solution to this abundance of emotions you have for a trade is to simply practice emotional detachment. Practice removing yourself from the trade mentally. Okay? Now, it's very, very easy to say when I'm in this position right now, talking to you guys on the screen, but the honest truth is, you have to learn to practice this and defeat your mind. Why? Because, guys, you're only going to see results when you're not emotionally attached. You're only going to see results when you're not as emotionally invested in every single trade. Okay? So what must you do? You must learn to build emotional detachment based on ability. Point number one was ability, right? You have to become good. There's no second guessing. There's no two ways about it. You have to learn to develop emotional detachment through ability. Ability is the only way you will be able to emotionally detach yourself from a trade. Why? Because you're actually good. Point number one was what? Ability, right? Ability is non-negotiable. You have to be good at trading. You have to be good in these markets. Why? Because this is what's going to allow you to be emotionally detached from an outcome of a trade. Why? Because, if I hit stop loss once, twice, 3, 4 times, it's okay because I know how to trade and I know that for me, it's risk to reward. That one trade will make back everything plus profit. How can you truly think this good of yourself as a trader if you don't have ability? So the motto is what? The motto is you need to learn to develop emotional detachment that is backed by ability, not backed by hope. Oh, I hit stop loss. Maybe next one will hit TP. No, you must know. You must be so certain of yourself. You must bet on yourself. Okay? You must count on yourself. You must back yourself. How can you back yourself without getting that tiny bit of imposter syndrome crawling in? It's by knowing that you're actually good, that you actually belong here, that you actually put in the hours, that nobody was watching you when you was putting in all that chart time, late at night, just watching, being obsessed with anything, talking, trading. That's how you develop what? That's how you develop emotional detachment, because you are in a place of belonging. This trading industry is your place of residence. You're not a visitor here. So for you to not behave like a visitor, for you to have true emotional detachment, you must be good. And you must learn to develop what? Emotional detachment based on ability, not emotional detachment based on hope. What is a practical step you can do, trading aside, to also aid you in your emotional detachment? Guys, you need to have something going on for you. Okay? Get a job. I know a lot of these traders online glorify, oh, I'm a full-time trader, and majority of them are not even full-time traders. Majority of them are just like people on the come up. They're just trying to grow their personal brand. So it looks overly glamorized. I'm going to be the one to tell you, get a job. You need a job. Number one, go get a 9 to 5. Number two, have hobbies. Go to the gym, go to Pilates, go do things, go MMA, go boxing, go to pottery, okay? Go for a run, go and do things. I'm telling you, be in university. I'm telling you, if you're already, keyword already, if you're already in university, don't drop out. Don't drop out. Finish it. Okay, finish it. Until you see results from trading, then, okay, maybe reassess. If you haven't seen anything yet, then carry on. Carry on that degree. Okay? Guys, you need to have other things going on for you in order to become a profitable trader, in order for you to develop that emotional detachment. Why? Because your mind is not occupied by trading 24/7. You can be obsessive. No problem. But don't be addicted. Okay? Don't be addicted. Name me one addiction that's good in this world. There are no addictions that are good. And don't come to me with no fancy quote, oh, I'm addicted to the hustle. I'm addicted to the grind. I'm addicted to the gym. Don't give me that stuff. You know what I mean. Addiction is not good. Don't be an addict. Don't be a crackhead in these markets. Okay? Don't. Be someone who's calculated. Have rational thinking. Have sound IQ. Have critical thinking before you make a choice. Have critical thinking before you make a decision. It's important, guys. It's absolutely imperative for you to have other things going on outside of trading, because this is going to aid you in your trading, even though you may not realize it in the moment. I'm telling you firsthand, when you have other things going on for you, it makes you a better trader by default, point blank, period. Now, if you're in a situation where you physically can't have anything else going on for you for any particular reason, I'm not sure, maybe, you're a stay-at-home mom and you have kids and you can't do anything else, no problem, I hear you. But you can still go to Pilates, you can still go work out, you can still go for a walk, you can still go for a run. Okay? So it's subjective due to everyone's circumstances, I understand. But the overall point is what? You must busy yourself and you must occupy yourself in other areas of trading for emotional detachment to be a real thing. You're not worried about, I haven't made money from trading this month, I've got no money. Why? Because you have your money coming in from your job. Once you're consistently profitable and you have that good amount that can be your cushion in life, or at least for a year, then you can leave your job and go full-time with trading. Why? Because you're backed. You're backed by solid finances that can cover you for, forget rainy days, for rainy weeks and rainy months and rainy years. That's when it's a good time. Think properly, guys. You want to make this a career, treat it like a career. Treat it like a career and have solid contingencies in place. Contingencies not in terms of I need a plan B. Contingencies in terms of, okay, if I blow this account or if I lose this capital that I have right now, what do I have to fall back on? That is how you must think. Number 5, journaling your trades. What is not tracked cannot be measured. You cannot know if your path to profitability is looking bright if you don't have systems in place that allow you to visually see your path. You need to journal, okay? And some people might be lazy. If you're lazy, go and use TradeZella. Use TradeZella. Use my code Yarimi, okay? Use TradeZella. Why? Because it does everything for you. All you have to do is just input a few notes, add a few screenshots, but it will show you, okay? It will show you your most profitable days. It will show you your P&L for the day, for the week, for the month, okay? Your most profitable pair, so on and so forth. You need to be able to have a physical footprint of what your journey to profitability is looking like. It's important, guys. Take it seriously, man. Take it seriously. If I'm going to the gym and I want to lose weight and I want to get a six-pack, I'm not just going to turn up to the gym every day and do sit-ups. I know that builds abs, but does it show abs? No, because abs are made in the kitchen. How am I supposed to know if I'm going to eventually get a six-pack, if I'm on the road to get a six-pack? Is by understanding I need to be in a calorie deficit. I need to make sure I'm not having too much sugars. I need to make sure I'm not having too much carbs. I'm not a gym guy, so hey, my gym guys, please don't come for me. But you guys get the point. You know, okay? You need to be able to track these things to know if you are on the road to progress or if you're just doing circles. If you're just doing circles in this roundabout, one can only go around the same roundabout for so long. There comes a stage where you have to choose your exit and find your way home. That's an advice that one of my older bros gave me. How much longer are you going to be going around this roundabout without choosing an exit to finally be determined and actually do things correctly by the book in your trading journey? How much longer? How many videos have you watched of guys telling you, yeah, risk management, journaling, trade at these times, X, Y, Z, but you still haven't done it? Maybe you do 2 things. Maybe you do 1 thing. One can only go around the same roundabout for so long. There comes a stage where you have to choose your exit and find your way home. And that way home is unfortunately quitting for a lot of people. And then they want to blame Forex. Oh yeah, I did Forex. You did not do Forex. Forex did you. Because you never adhered to the rules that were given to you. You never adhered to the true path that someone must tread to become profitable. And now you want to blame Forex for your incompetence, for your lack of understanding, for your lack of commitment, for your lack of discipline. You're sleeping, you're drooling, you can't even wake up for your session, and you call yourself a trader. Now you want to blame Forex because you're just another statistic? You're just another failure? It's very easy to point fingers and blame when you haven't done the work necessary. And unfortunately, that's the path a lot of people use. They just love to point fingers and take zero accountability. Number 6, you need to have a trading plan. You need to have a criteria of time. Okay, I trade these pairs. I trade at this time for London session. I trade at this time for New York session. I am not going to deviate from any of these 2 times at any given point. Why? Because I realize every single time I trade outside of my time window, I hit stop loss. Okay? Number 1, you need a timing criteria for when you trade. Number 2, you need an entry criteria. Okay, what setups do you even take? Do you even know what your usual setups look like? Okay, what does it look like? Okay, you have a sweep of this high, you have an inducement of this low, you have this, you have this. What does it look like? What are your favorable setups that you want to see in the markets every single day? Okay, what do they look like? If you don't have them, draw them out and have them next to you. Have them next to you, because the market will show you either 1, 2, 3 different variations of entry criteria. Okay, with how I trade. It's your job to be able to spot them. Ask yourself, what are my entry criterias? And the same way you should have entry criterias, you should also have deterrents. Things that deter you from entering. A list of red flags. You must build a list of red flags to show you, okay, this is a possible danger zone. This is a possible early zone. This is possibly where early sellers will enter. This is possibly where early buyers will enter. So it's very, very, very important for you to have these entry criteria, and most importantly, those deterrents in place that can show you where you could possibly go wrong ahead of time. You need to have an exit criteria also. A lot of people are focused on the entry, and that's great because you can't be in a trade without an entry, right? But you can't exit a trade without an exit point, without a TP target. You cannot do that. So what are your exit criterias? What are usually your zones for TPs? Where do you usually target? Have these zones written down, understand them. And it obviously is subjective to each and every entry because price is at different levels and there are different levels of liquidity to target. But understand what type of TPs do you usually go for? Okay? And have those exit criteria and do not deviate from them. Don't say, oh yeah, you know what? I usually take profit at these equal highs in this scenario, but today I think I'm going to take profit at retail resistance. It doesn't make sense. Why are you changing it? Just stick to what you know. If it's Asia highs, there's Asia highs on this particular setup because it's closer. Okay, no problem. Good. It offers you a good risk to reward. Okay, if you're in an internal trade and you see equal highs there, beautiful. Take the profit at the equal highs because you believe that price could potentially reverse after inducing those equal highs. Do you see what I mean, guys? You have to understand that each scenario is relative and each exit criteria is relative to the setup at hand. So you must have exit criteria that make sense for the current setup. If pro trend price is bearish and I'm internally catching a buy, I'm not going to expect price to take out a structural H4 high. Why? Because I'm only internally bullish. So what does that mean? That means I can't have great expectations for price to be long for so long. I have to be realistic with it. So my exit criteria have to be in conjunction with the pro trend bias if I'm internally buying. Does that make sense? Next is something that I personally like myself. You don't have to do this, but for me, it works very, very well. And that's taking partial profits. Taking partial profits for me, it just puts my mind at ease. Why? Because I know that, okay, let's say after a certain risk to reward ratio, 1 to 3, I'll take 50% of my volume off and I'll move my stop loss to break even. I will do this, and what will happen after that? If price hits my stop loss, I've already made money, and number 2, I haven't lost money. So it actually puts me in a better position for my next trade. Why? Because I'm not trading out of a loss. I'm trading from a sane, stoic, psychological point of view. Why is that? Because I haven't taken a loss. It's like nothing ever happened. If anything, I've made a bit of money. So my next trade, I'm still coming onto the charts with that same level of confidence. Why? Because multiple stop losses after partial profits are taken, multiple stop losses at break even after partial profits are taken, will eventually lead to overall profit. If you take a look at your P&L at the end of the week, you'll possibly see 1% or 2% just in partial profits that were taken and price having reversed after partial profits were taken and hit your stop loss at break even, so you did not lose anything. So the accumulation of those minor profits that were generated from partial profit taken systems led to what? An overall increase in your P&L at the end of the week. So don't undermine those small wins. What do I say all the time? Mountains were made from pebbles. You want to have a mountain of a P&L, you best start laying foundations that can secure pebbles. Don't be in the trade for pebble type of profits. Pebble type of profits for me is like $10, $5, $100, $200. No, like don't be in the trade for pebble type of profits. Let the trade play out to the desired take profit target. Why? Because you're in this trade because you clearly believe, due to your technical analysis, that price is going to reach this point, right? So let it reach that point, but don't let it reach that point with delusion of what? Delusion that price can never come back and stop you out. So have those security measures in place and have those protocols in place where, okay, you're going to take partial profits, you're going to take off a certain amount of volume after price moves up this risk to reward ratio. You put your stop loss at break even, let the rest run till full TP. And the last point of number 6 is having consistency with your trading plan. Why? Because having consistency within your trading plan defeats impulse. And when you've defeated impulse, this allows you to keep things mechanical. And again, keeping it mechanical will actually aid your emotional detachment. Okay, it will aid you in developing a better level of emotional detachment in the markets, which ultimately will make you more profitable because you're not going to cry about every single trade. You're calm, you're zen about the outcome. And last but definitely not least, it's maintaining a bulletproof mindset. Maintaining a bulletproof mindset and thinking long term. Guys, you're here to make something out of this, man. You're here to make something out of this. You're not here for a quick fix. You're not here for quick profits. You're not here to just go to the moon like this is some crypto meme coin. Okay? You're here to make something. This is a skill. Take this skill seriously, because if you take this skill seriously, it seriously will reward you for the rest of your life. Only if you apply all of these 7 steps. If you apply these 7 steps and you take it seriously and thinking that, okay, you know what? Once I've learned the skill, I can actually generate X amount of income. I'm not going to say you're going to make 10K a month, 20K a month. No, your income will fluctuate, no doubt, but it will allow you to make a substantial amount of money that you can now use to invest in other areas of life. You can buy some land back home. You can build on that land. You can buy a house. You can invest in property. You can invest in X, Y, Z. You can actually do things. Why? Because trading is a money-making vehicle. It's a money-making machine that you can use to allow you to receive passive income, because trading isn't passive. But trading can generate you the type of money where you can invest in things for your income to become passive. You see, I sometimes think to myself, okay, you know what? I desire this in my life. I want to buy this. Okay, let me go in the charts. Let me trade for a bit, and hopefully within a month I can accumulate enough profits to pay for that specific thing. For example, my house right here. I paid the year's rent with a €1 USD trade. Go back on my video and check it out. So whenever I want to achieve a certain thing, or I want to pay for a substantial thing, not everything, of course, because I have other avenues of income that can pay for that, okay? But whenever I have a certain goal in mind, I like to use trading to pay for it. Why? Because it feels nicer. Moving to Dubai with trading profits, it feels good. It feels good. Why? Because trading pays for it. Furthermore, Euro USD paid for it. So you have to put your mind in a place where you truly believe that these things can happen for you. It can happen for you if you have all of these rules in place. It can happen for you if you follow these set of habits that I've just given you right now. Because I promise you guys, you can make something work. Because guys, I genuinely believe you can make something of yourself if you follow these 7 habits and you develop these 7 habits within yourself. Have that bulletproof mindset where someone tells you no, you tell them yes. And you're not saying yes delusionally. Why? Because your yes is backed by ability. And you're speaking from a place of ability. You're speaking from a place where you have proof. You've done it. You've done something substantial. You've made $5,000 from your payout. You've made 25K, 30, 40, 50K from your payout. You've made 10K from a payout. So when someone tells you, oh yeah, no, trading, that stuff's a scam, you say, what? What are you talking about? No, it's not. Look, I've got paid this much. You need to learn to build that bulletproof mindset, and a bulletproof mindset will only come when you have results. We're human beings. Sometimes we have down days where we may get that imposter syndrome. We may start thinking, how much longer is this going to take? We may think, is this really for me? Why is it not working out for me? It's been quite long. It's 6 months to a lot of you guys. So on the down days that are absolutely normal, you need to allow the bulletproof mindset to be built by proof, to be built by your record, to be built by proof, to be built by what you have done for yourself in these markets. Because that is what is going to defeat those sly whispers of imposter syndrome. That's been the 7 habits to become a successful trader. I hope this video has benefited you. If it has, leave a comment down below. Catch you guys in the next video. Take care. Peace.